Hello ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. This is a Forex Trading Education video, and I'm going to title it Trading a Wonky Market. Being American, I honestly can't say the word wonky has made it into my mainstream conversational language, or written word for that matter. A website called Grammarphobia says that both the American Heritage Dictionary of the English Language and the Merriam-Webster's Collegiate Dictionary say wonky is chiefly British and means shaky, unsteady, or awry. So I guess it might not be appropriate for me to start using it more locally here in the US, at least just yet. Nevertheless, living through another summertime market, I know I have started to appreciate the word more and more. Summertime markets, due to lack of liquidity from traders being on vacation, can lead to wonky market price action. Price action can be random and choppy and shaky and unsteady and awry. And that equals wonky, at least by the definition. Let's take a look at the dollar versus Canada as it is the epitome of a wonky market. First off, the dollar Canada's wonkiness is being helped by wonky fundamental conditions. Oil prices, often a contributor to Canada's strength or weakness, have been mainly down but also very volatile. It is not uncommon to have 2, 3, 4, or 5% daily price changes either to the downside or to the upside. This fundamental reason is leading to wonky market price action. Secondly, the October political election is contributing to wonky trading conditions as a political shift may be in the workings. So wonky market conditions is a function of wonky fundamental conditions. Wonky begets wonky. Is there a way to trade wonky markets, even ones like the dollar versus Canada? Well, first off, you need to recognize the potential wonkiness of the market. That comes from the fundamentals and technicals. If the market is behaving wonkily, you need to think wonkily. You need to expect shaky, unstable, awry trading market conditions. Having the mindset of this type of market is an important step in trading a market. So if you can say the markets are wonky because of this, that, or another, that can set up how you need to approach trading that market. Second, since you're expecting that type of wonky market, you need to be really patient. You don't want to get in a fight with a wonky market. You want to wait for the fringes, the extremes, and then look to react with a trade at those extremes. The extremes give the best risk-reward conditions, especially if the wonkiness has a wide low to high band. There is more room to move if you are right, that is the reward. If you are wrong and the new extreme is made, get out and lose a little on that trade. So looking at the hourly chart of the dollar versus Canada, on September 1st, we can characterize the market as being wonky. The price action has been up and down in random fashion. Intraday, there are a lot of sharp moves, both higher and lower. So the mindset should be for a wonky market. If that is your mindset, then you need to be patient to look for extremes to trade. The market low on August 31st came up short of support at 131.10 level by about 5 pips and started to rally higher. That rally stalled right at the 100-hour moving average, the blue line in this chart. For those of you who know my method of trading, that is a nice level to stall at. The 100-hour moving average is what I call an ACT, or attacking currency trends borderline level. Isn't it an extreme though? Not really. In fact, if you put a Fibonacci from the August 25th high to the August 31st low, it's right in the middle, right at the 50% retracement level. Traders can sell against it, but they need to be careful. The markets, after all, are wonky and could move higher. So keep a tight stop if you do that trade. Also, you must be aware that the reward may only be to the lower extreme, so only half of the total range. In this case, the combination of the 50% retracement and the 100-hour moving average holding led to the price moving back to the downside. Now, when the price comes back to the low, is this a potential extreme? And the answer is yes. It is on the outskirts of the wonkiness. Is there risk that it goes lower? And the answer to that is, of course, yes. But you are trading at an extreme and you're being patient in your trading. The reward could extend all the way back to the upper extreme, and the risk is still very small. The market holds, and indeed, the market moves higher from that point. Now, the rally to the upside has its share of wonky price action, but it keeps a bullish bias all the way up to the upper extreme. The top extreme has a high from August 31st and the trend line coming down from the August 25th high. It is not at the extreme that it is comes up short against the August 25th high, but there are a couple reasons to trade at that level, and indeed the price starts to move back down. That next move to the downside comes back lower, and on September 3rd it runs into the trend line connecting the recent lows. Again, that is close enough to define an extreme, and another bounce occurs into the unemployment data on September 4th. After the volatility from the employment report, the market price moves higher and once again runs into a topside trend line on September 8th. Is this another potential extreme? Another patient extreme? Yes. The risk can be defined and limited against the highs from October 31st and September 2nd. The price is trading near highs and having trouble moving higher, and indeed the price starts to come back down. Wonky markets can pose their share of frustrations as there's a lot of random volatile price action. However, if you can make a judgment on the wonkiness of a market, if you can change your mindset to reflect that and then wait patiently for the extremes, you might be able to bring order to an otherwise wonky market. If your trading P&L is wonky at best, and as a result you are looking for a coach, a mentor with a logical, repeatable, simple method to trade the Forex markets, why not consider signing up for the Attacking Currency Trends Traders course? My next course will begin on September 18th and run to September 25th. There are a few openings left, so check it out. You trust ForexLive each and every day. Why not take the next step with us through our formal trading course? For information and to sign up, please go to education.forexlive.com/act. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.